David M. Rubenstein is New York Times bestselling author of How to Lead, The American Experiment, and The American Story. You may also know him as the co-founder and co-chairman of the Carlyle Group, one of the largest and most successful private equity firms in the world. Rubenstein is chairman of the boards of the John F. Kennedy Center for the Performing Arts, the Council on Foreign Relations, and the National Gallery of Art. He's an original signer of the Giving Pledge and a recipient of the Carnegie Medal of Philanthropy and the Museum of Modern Art's David Rockefeller Award, the host of Bloomberg Wealth with David Rubenstein on Bloomberg TV, and the David Rubenstein Show, peer-to-peer conversations on Bloomberg TV and PBS. John Rogers is co-CEO and lead portfolio manager of Ariel Investments, which he founded in 1983 to focus on patient value investing within small and medium-sized companies. He has been highlighted alongside legendary investors Warren Buffett, Sir John Templeton, and Ben Graham in the distinguished book, The World's 99 Greatest Investors. He's a member of the board of directors of McDonald's, Nike, the New York Times Company, and Ryan Specialty Group Holdings. Following the election of President Obama, John served as a co-chair for the Presidential Inaugural Committee in 2009, and more recently, he joined the Barack Obama Foundation's board of directors. So without further ado, I am thrilled and honored to welcome to our virtual stage, David Rubenstein and John Rogers. Take it away.
Well, thank you. Thanks so much for that very kind introduction. I feel honored to have the chance to be able to interview you, David.
I'm sure you do a very good job, and I should disclose to everybody in listing describing the best investors in the United States. John Rogers is in the book as a person who has built an incredible company and become one of our best known investors in the value investing area.
Well, thank you, David. And you've had just such an unbelievably extraordinary career. It's hearing all the highlights again, it's just it's inspiring for so many people throughout the world. So I'd just like to start with just the beginning. You grew up in Baltimore, and can you tell your audience a little bit about your upbringing and the early influences that shaped you as a person?
Well, I grew up in Baltimore. I was the only child of my parents. My parents were not college graduates. They weren't even high school graduates. My father had dropped out of high school to go into World War II. He came back. He met my mother. She dropped out of high school. They got married. And, I'm the only child that they had. My father worked in the post office for his entire career, making a very modest salary. And so I didn't grow up expecting to get any real money or make a lot of money. It wasn't on my radar screen. I was interested in being a lawyer and going into politics probably more than anything else. And I did do that for a while. I worked in the Carter White House, but ultimately I diverted and went to out of the practice of law and into the business world.
And who are some of the early influences that impacted your kind of early successes? Your trajectory was starting to go forward, and were there mentors, role models, people that helped really shape you?
Well, I was always looking up to John Kennedy, and of course, I was much younger at that time. But he had been elected president when I was in grade school, and I admired the speeches that he gave, and certainly the inaugural address. And so, when I graduated from the University of Chicago Law School, I wanted to go work at the law firm that the person who had written that speech for John Kennedy or worked on it, Ted Sorensen, was at. So I went to work at Paul Weiss in New York, and Ted Sorensen helped me with some contacts that ultimately led me to go to Washington, and ultimately that led to the Carter campaign. So he was one person who helped me, and I worked in the Carter campaign, and my boss was Stuart Eisenstadt, who later became the domestic advisor to President Carter, and so I worked for him for 4 years. And so he was a bit of a role model as well and a mentor.
And life in Washington can be really complicated, lots of bureaucracy, and things don't move very, very quickly. I can't see you being patient with that type of a approach to decision making.
Well, as you may know from your friend Barack Obama, the White House is different than the gigantic bureaucracy in Washington. I did work in the White House, and there it's a very fast pace. It is difficult to move the bureaucracy, there's no doubt, But when you're working for the president in the White House, you tend to think that you can get people to do things more quickly. There's no doubt it takes time to get things done, and it's getting even worse. And now I think because of the lack of bipartisanship in Washington, it's even more difficult to get anything done. But at the time I was there, bipartisanship sort of existed a bit, and it was possible to get things done. But you're correct, it's not an easy environment right now.
Is there some, I know we're going to get to the book in a few moments, but is there some hope there in Washington? Do you think that there's a path we can get back to a normally functioning government?
I think when your friend Barack Obama became president, I think the Republican Party more or less said they thought that they would try to block him from almost anything he wanted to do. And I think they successfully blocked him from doing a lot of things. And from that time on, both parties have more or less tried to not be bipartisan. So I don't think it's going to change until we have a crisis that is a 9/11 type crisis, which we don't want to have. Even the coronavirus pandemic crisis did not produce bipartisanship by and large. So I'm skeptical for a while that we're going to get a kind of environment that is one we want. And I think it's sad because one of our country's missions has been to kind of help other countries see the virtue of democracy and our ability to help persuade people around the world that democracy is a better form of government has been impaired by our inability to make our own democracy work.
So after your time in government and your time in law firms, you came up with the idea to start a private equity firm at a time in the country's history where that was a novel concept. It wasn't like now where every business school graduate wants to go into private equity. So how did you come up with that idea to not do the conventional career path and move into private equity?
Well, if you're very good at something, you probably keep doing it because people tell you you're good at it. And people like to be told they're good at something. Nobody told me I was good at practicing law. So when I left the White House, I had only practiced law in New York for 2 years. So people weren't jumping up and down telling me how great I was and they wanted to hire me. In fact, people had told me before we lost the election how great I was. But once we lost the election, those people never called me back. And so I struggled for a while to get a job practicing law. It took me about 6 months to convince people to hire me. And then I didn't really do such a great job practicing law. I wasn't that good at any one area specialty, and you really need a specialty in the way Washington practices law. So I read about Bill Simon, who had been the Secretary of Treasury under President Ford, and he had gone out and set up a little buyout firm called Westray, and he bought a company called Gibson Greeting Cards. He put $1 million in, he made $80 million in about 18 months. So I read about it and I said, this is better than practicing law. I just got to find out what a leverage buyout is. And so I tried to round up some people in Washington who had some finance experience. There were no buyout people in Washington, but I recruited some people who I told them we could start the first buyout firm in Washington. And they may have been as naive as I was about how we could put it together. But I finally raised $5 million to get it off the ground in 1987. And today we now manage about $376 billion. So it's grown a fair bit. But we had some luck and we made some mistakes along the way for sure.
What were some of the early hurdles getting a private equity company started so long ago? And how did you jump over those hurdles?
Well, the people who started private equity firms in those days, and the phrase private equity hadn't been invented yet, they were called buyout firms or leverage buyout firms. They were all small and they were mostly all in New York. The people that started them were basically investment bankers who converted into investors. The hurdles we had that we didn't have any investment bankers in Washington that I could recruit, and I was going to do it in Washington. Now people ask me, why in Washington? Why not a big city like New York? Well, if I'd gone to New York with my limited experience in the professional world, practicing law and working in the White House for President Carter, who lost the election in 1980, people would have laughed very, very loud because I didn't have the background that was requisite to starting up one of these firms or getting any money. So I decided to do what a senator from your state once said. Everett Dirksen, who was a senator from Illinois during the 1960s, famously said, when you're getting kicked out of town, get out in front and pretend you're leading a parade. And what does that mean? It means take advantage of the situation you find yourself in. So I'm in Washington, D.C., so I said, okay, we will understand and focus on companies heavily affected by the federal government, and we can say the guys in New York really don't have that expertise. So we initially started by doing things in aerospace defense and telecommunications, and we brought in a former Secretary of Defense to help us in that area. That was Frank Carlucci. So we moved slowly at the beginning. We didn't have a fund. We did it deal by deal. And it took us a couple years to raise a fund. It was only $100 million, and it took a long time to raise that. So it took a while, but you know from your own experience, when you started your own firm, 2 years after you graduated from Princeton, did people tell you this is a good idea?
Most people were very, very skeptical. You're right. Even my father was skeptical.
Right. Well, my mother was skeptical. In fact, she said, David, keep your law license because you never know. You might have to fall back on it when your firm doesn't work out.
And you had early success with a terrific performance. So that probably is a good bridge to talking about your book, about about the world's greatest, most successful investors. So start. What do you think are the top characteristics or traits of successful investors?
Successful investors, the great investors, the people in the book, by and large, have these traits in common. And I should point out that in any profession, the best people in chemistry or baseball or whatever it might be, they're going to have certain traits in common. In the investing world, the traits in common are generally these. Number one, they tend to come from families that are blue-collar families or middle-class families, not from extremely wealthy families. Two, they tend to be people who are pretty good in math. They also tend to be people pretty good academically. They're not generally high school dropouts. They tend to be people that like to make the final decision. They tend to be people that like to read enormous amounts of material because they never know when they're going to use that information. And they tend to have a really insatiable appetite for more information. They love to read. They also tend to, I'd say, like to take the blame for things. They're willing to take the blame when things don't go right, and they're willing to share the credit when things, go right. And then they're willing to take the blame when it doesn't go right. They also tend to, I think, want to be the final decision maker in anything. In other words, when there's a big decision to be made, they don't want to delegate it. They're willing to take the responsibility for it. But when they make a mistake, they're willing to cut their losses and go on to the next thing. That's a problem I've often had. I keep thinking about my mistakes, decades later. Generally, people who are really good investors, they recognize they're going to make some mistakes. When they see a mistake's been made, they cut their losses, they go on to the next thing. They also tend to be fairly philanthropic. They generally enjoy what they're doing so much so that they, ultimately it's more of a not a game for them, but they enjoy it so much that if they weren't getting paid, they probably still do it because they love the intellectual challenge, the battle of wits, and they do make a fair amount of money doing it. And when they do that, they tend to be fairly philanthropic. And so I would say the most important quality that they have, though, of all the qualities, is they're willing to go against conventional wisdom. Conventional wisdom will say, go do A, B, and C, and they will say, no, I'm going to do X, Y, and Z. And that's what's made them really spectacular because they generally don't go along with the masses. They don't take the path of least resistance. They're willing to say, I'm going to do something that people might not think is a good idea, and they tend to follow through on it. So like when you started your own company, people told you it wasn't the greatest idea in the world probably to start your own company 2 years out of Princeton, but you persisted with it and you weren't willing to just be deterred from it.
Well, it's interesting. I grew up in Hyde Park and was part of the University of Chicago community. And you mentioned earlier that you went to the University of Chicago Law School. And, the university is known for its independent thinkers. It's, they love rigorous debate. They love non-conventional ideas. Do you think that you can teach someone to be an independent thinker, someone who's comfortable standing alone?
Well, the age-old issue is, are you born with certain qualities or can you learn them? I'm not sure you're really born with certain qualities. I mean, if your mother and father were Olympic athletes, there's probably a reasonable chance you might be athletic, but it's not necessarily the case. And in fact, if you take a look at professional athletes in the NBA or the NFL, while there are some who are the children of those professionals, generally most people didn't have fathers who were in the NBA or the NFL. So I think as generally the case as well with investing. I think you might have some intellectual advantage, perhaps, if your parents are really brilliant people, and maybe you got some of that. But generally, I think you learn it by on-the-job training, by having good mentors, by experience, and by learning how to lose and make mistakes and picking up the pieces afterwards.
That's because you're someone who's, a non-conventional thinker. you never run into anyone who says, I just met someone that reminds me of David Rubenstein. You're a one-of-a-kind individual. How do you think that happened for you?
Well, I got lucky in many ways. Who would have thought my investment business would have taken off? I had an idea that changed the face of private equity. It doesn't sound very impressive when I describe it to you, but it changed the way private equity was done to some extent. And that was historically buyout firms just did buyout firms, venture firms just did venture and so forth. I had the idea that we could do what mutual funds had done, which is to say, have many different funds using our brand name and our administrative back offices to service all them. So if you liked us in buyouts, I said, give us a chance in venture. You like us in buyout and venture, give us a chance in growth capital and so forth. So I built a family of funds, and that was different because it took the buyout business out of being small organizations into being more institutional, much larger. And then I had the other idea of globalizing it by taking, building teams in Europe and Asia, Japan, Africa, Latin America, and so forth. And that was novel too, because historically people invested only in their country in which they really live. So I did those things, and I just had an idea that might work. But, generally I would say I try to find different things, and maybe because I'm not, I've always thought that I wasn't the smartest person, the best looking person, the richest person, the most physically gifted person, that I have to work harder. And, maybe I get insecurities from that. When you're insecure, you tend to work harder. And I've generally had the view that if you work harder, generally you can probably overcome for the other deficiencies you have.
Well, it sounds, we talk about you being an American original. You truly are, but you have had great vision, and to be able to see out and see how the world is going to evolve before others. That's really, really rare. And so something seems to me something you were born with.
I'm not sure about that. I would just say I'm not that great, but I would say I got lucky in many ways. Luck is an important part of life. And I say in my book in leadership that luck is one of the most important things you can have in life, but you make your own luck. You make your luck by meeting people, by listening to opportunities, and you don't have to be brilliant necessarily to be successful. You can be lucky in some ways, and obviously you have to have some talent, but I got lucky. And, if I'd had lots of brothers and sisters, maybe it'd been different. If my parents had been different in what they were pushing me to do, maybe it'd been different, but my parents really didn't push me for anything. And from your own experience that being an only child has its pluses and minuses, right? But maybe it gives you a drive to be more driven.
Well, throughout the book, I loved reading the book, and you mentioned one of my favorite investors and heroes, Warren Buffett. And in sports, people sometimes argue whether LeBron James was better than Michael Jordan or Kareem Abdul-Jabbar, but there's a consensus that Warren Buffett's greatest investor of all time. Do you agree with that consensus that he's the best ever?
I think so, based on the information we have. And let me explain the reason. Warren Buffett runs a gigantic company now called Berkshire Hathaway, and it's more of a conglomerate today than an investment company. However, he built it by being a very good investor. And let me give everybody the statistics that show that. For the last 60 years, he's averaged 20% a year. So, it's one thing to average 20% a year for 5 years, 10 years, 15 years, 20 years, 30 years. He's done it for 60 years. He's averaged 20% a year. And that's produced, a staggering fortune for him, and mostly a staggering fortune for his investors. And so I think he's the most consistent, and I think the most brilliant investor of them all. Now, some people have earned more money per annum for 1 or 2 years, some maybe for 5 years. There's somebody in the book, Jim Simons, who really invented quantitative investing, and he's averaged, I would say, for probably the last 30 years, about 40% a year from his internal fund, Renaissance Medallion Fund. But that's only 30 years. It's not 60 years. So I would say, yeah, Warren Buffett's probably the best.
One of the things you did within the book was to look at different categories, someone's in real estate, someone's in long only, some in private equity. I'm curious, do you see similarities between investors that have specialized in different parts of the financial world?
Well, investors, they're very rare to find investors great in everything. So what I did is I divided the categories up into three basic categories: mainstream investing, which is stocks and bonds and traditional real estate, you might say, and then I would say alternatives, which is buyouts, venture capital, growth capital, distressed debt, hedge funds, and then things that I called cutting edge, which is things like SPACs or cryptocurrencies, ESG. And in each of these categories, you have people that really specialize in these one areas. And it's not clear to me that if they gone in a different area, they would have been as successful. They generally had a love for what they're doing. And as a general rule of thumb, having a love for what you're doing is more important than almost anything else. You have to have a passion for it. And, the University of Chicago last week won a Nobel Prize with one of its economists. And that economist, like others who won the University of Chicago Nobel Prizes or other Nobel Prizes elsewhere, have a passion for what they're doing. Nobody ever won a Nobel Prize hating what they do. They love it. And the same is true for investors. They generally love what they're doing if they're really good at it. And the money becomes almost irrelevant at some point. When you see somebody worth 10 or 20 or $30 billion and he or she's still investing, obviously they're doing it because they love it, not because they need more money.
Moving into the current day, we were talking earlier about how crazy this market is. And, Warren often talks about the fact that volatility should be your friend. How are you feeling about this current environment? Is it an opportunity or is it a time for patience?
There's a general rule of thumb: the greatest fortunes made by investors are made when there's blood in the streets, because those who have the courage to buy when the prices are down are generally going to benefit, because, as Warren Buffett has said many times, when you bet against the U.S. economy, that's a mistake. Betting against the U.S. is a mistake, and the U.S. will bounce back, and our recession that we're likely to be in next year is going to be over, I think, in a relatively short period of time. And the prices today that seem maybe a little expensive are actually very cheap because they're way down. All the private equity firms, for example, the publicly traded ones, their stocks are down by about 50% right now. So I suspect they will come back because they all have pretty good businesses, these publicly traded ones, including my own firm. And I would say that it's tempting to go into the market when the markets are going up, and it's tempting to sell when the markets go down. But that tends to be the biggest mistake that average investors make. When the markets are rushing up, they jump in, they think they're going to miss something. When the markets are going down, they're afraid, and they take their money out and put it under the mattress. And that generally is the wrong thing to do. It's pretty good idea to take some money off the table when you can, and when the markets are going up, don't be too piggish and don't wait to make 5 times your money if you've already made double your money. And don't panic when the markets go down. Markets will come back in time.
Well, I would completely agree with that. One interesting area, I when I was researching this and doing the homework for our interview today, I saw your interview with Ken Griffin, which was really fascinating. Yes. And you talked about cryptocurrencies, and I know everybody around the country and around the world is fascinated by this sector and wondering what's going to happen, and is it an investable asset class? So I'd be curious what your view, you could give the audience your views.
Well, if you go to Las Vegas and you gamble, you probably realize that you're going to lose money, because very rarely can you beat the house. Now, you might win one night, and then all of a sudden you think you're an investment genius. You go back the second night and you lose it. Las Vegas exists because people are not going to beat the house. But people have fun doing it. Some people love to go to Las Vegas. They know they're going to lose money, but they just enjoy the pleasure of it. Just like some people like to play sports, some people like to watch sports, and some people just like to gamble, the thrill of it. So if you get some thrill out of investing or speculating in something like cryptocurrency, allocate as much money as you can afford to lose, like you might if you go to Las Vegas, 1 or 2 or 3% of your net worth, and have the fun of investing in crypto. So I think it's a very difficult thing to think you're going to make a lot of money in it, though some people have made money in it. I interviewed somebody in the book who's made a fortune in Bitcoin. It's gone down by a fair bit now, but still he's up by a lot. I'd say I do think that not Bitcoin, but necessarily, but all cryptocurrencies have a future, in the sense that, or I should say the industry has a future, because there's clearly the young people are fascinated by it. And while they recognize they might lose their money, they seem to be determined to participate in this. And they have done a very good job of lobbying our Congress to resist regulation of crypto. And I don't think crypto is going to be heavily regulated, because a lot of people have really worked hard on, particularly Republicans, to say it's kind of a libertarian thing. It's a thing that people should be allowed to do without the government's heavy hand on it. And as a result, I think crypto is not going away. Now, there's no underlying value to most of these cryptocurrencies. How much underlying value do you see in many things that people buy when you wonder why are they spending that much money in some of these things? So I have personally not bought any cryptocurrencies. I have invested through my family office in companies that service the crypto industry, because I think that industry is going to grow, and particularly in the next couple of years. And I think servicing the industry is probably a reasonable way to play that game. I think. And final point I would like to make about crypto is that when you're investing in cryptocurrencies, you might think that they are not valuable to people, but they have this value, at least. They are anonymous, and they are people, the government doesn't know what you have. So think about this. The Russian oligarchs had a lot of their assets taken away by Western governments. They knew what their yachts were. They knew where their bank accounts were and their homes and so forth. I think that when people saw that, they said, wait a second, this could happen to me. Suppose you're a wealthy Chinese person and you're afraid that China might invade Taiwan, and all of a sudden somebody's going to do to you what they did to the Russians. So you're probably going to put more and more of your assets in something that can't be reached by anybody. It's anonymous, and you can move it across borders relatively easily. And for that reason alone, I think you're going to see more and more people going to cryptocurrencies.
Interesting. Yeah, I had a tendency, the feeling it was topping out about a year ago, when the guy that delivers the pizza to my apartment every couple of days was telling me about all the money he was making in crypto. And so that was a sign of a top, it seemed.
Well, yes, the famous sign of when Joe Kennedy was getting his shoe shined in 1929, I guess it was, and his shoe shine person was telling him about the stocks he was buying. That's when he thought the market had topped. But I to be honest, I have sometimes people that are, in the service industries. I might see them here or there, and they ask me about crypto, and they tell me they're buying crypto. And though you do worry about, whether when people who don't really have that much money are buying crypto, maybe it's the top of the market. You don't know. But in your case, you are a value investor. And for those who don't know what that means, it means, you want to buy basically $1 for 50 cents, more or less. You want to buy something that's cheap. It's obviously cheap, and it's not inflated. And I would doubt that any value investor is really a crypto investor. Is that right?
You're right about that. Well, as we, you are, as was mentioned during the introduction, you have had some extraordinary leadership roles in this country. You served on many, many, many boards. You've also had the tendency to ascend to the chairmanship of some of the most prestigious boards in the world. Most recently, of course, you became the chairman of the University of Chicago, an institution that we both love. So what is it about your leadership style that it engenders such trust to give you these opportunities to lead?
I'm not sure. I think it's, a matter of luck, or maybe other people didn't want the job. And for example, University of Chicago, I wanted you to be the chairman, and you didn't want to be the chairman. So when you didn't want to be the chairman, they came to me. I have been willing to put the time in to do these nonprofit things. And the reason is I think it's a service to our country. I view it as, I take universities. I think one of the great assets our country has is our private university system. Public education system is very good too, for sure. But our universities are the envy of the world. The public universities and the private universities, the best ones, are the envy of the world. And so when you're serving in that capacity and you can be a leader of one of those universities, I think you're giving back to the country. So I view it as a kind of patriotic act to be involved with the university. And, generally I have the view that if you're on one of these boards, you should show up at the meetings, read the materials, and if you can, contribute in some way. So I've enjoyed my nonprofit life, and, I got lucky to be elected chairman of a number of things.
I would not call it luck, David. You work extremely hard, and you have the right attitude. Adam Grant, who wrote the great book, Give and Take, makes the case that givers ultimately are the most successful people in life. And you are an extraordinary giver. But when you give so much, what was the inspiration for you to become such a giver early in your life and be willing to give back, to spend your time and give your dollars to these outstanding institutions?
Well, I didn't grow up with any money, and I didn't expect to have any money. And so when I got it, it kind of was a surprise. I also felt that in a country with my last name, with my modest roots, I'm not sure I could have done what I did elsewhere. And so I really feel I owe a lot to the country, and I want to give back to society. And so I've tried to give away, a large amount of my money. I've actually committed to give away all of it, essentially. I've given my kids a very good education, and they're all in private equity now. They're in a reasonably good profession, but I don't think they need my money, and I want to give it away to good causes while I'm alive. And so that's what I'm focused on. And, there are a lot of other people doing much more than me, for sure, though. But that's my motivation, is to give back to the country in some ways. And I have different areas that I focus on, like everybody. And some of my areas have gotten to be reasonably well known, but, like patriotic philanthropy. But I try to give to many different types of things: education, medical research, history, reminding people of the country's good and bad past. Those are things I'm often focused on.
And, you're giving so much. I know from watching you take a lot of information, you learn a lot from being on boards. How has it enhanced your life, your approach to being so engaged and involved and giving so much?
Well, I like to read a lot, and reading is important to me. So I do like to read a lot of books and read the materials from board meetings and try to be prepared. I remember Jim Baker, who was in our firm for many years, the former Secretary of State, said that his father drilled into him the aphorism that prior preparation prevents poor performance. So if I'm on a board, we're doing some activity, I try to be prepared. I make a lot of speeches. I try to prepare for them. My interviews, just as you've prepared for this interview, clearly, I prepared for my interviews by trying to do a lot of research. And, I just think, if you're prepared for something, you won't be nervous, and it generally will work out okay.
But also, I've noticed you've met a lot of people. You are sort of in the mix around the world. You have access to, resources, information, relationships that just seem to would have enhanced your life as an investor and as a business leader. Can you talk about that? Because sometimes people don't understand how someone can spend as much time doing this good work. Don't understand good things come back to them also. So
I don't know if you can see me now. The light has gone out in this room. It looks like a motion detector. So maybe I didn't motion enough. I don't know. But
I can see you.
In any event, Carlyle, my main job at Carlyle was probably recruiting people and raising money. And to raise money, I had to run around the world. And so while I wasn't a natural fundraiser, I kind of taught myself how to do it. And by doing that, I got to meet people from all over the world and got to be involved with the organizations all over the world. And it's just it's a learning experience to meet people from all over the world and from different countries and different backgrounds. And I found it to be interesting to expand the world that I had from a narrow area of Baltimore to the world I'm now involved with. And so I do meet a lot of people who are doing incredible things. And I always keeps me humble, because when I see what some people are doing with their lives and what I'm doing by comparison, I realize I haven't done as much as I should do. And my biggest regret is that I'm now an age where I've lived a lot more than I'm going to live. And, I used to ask my parents, why do they read the obituary pages all the time? And now I know why people read the obituary pages, because I look and see which of my friends are still around or not. And clearly, when you reach my age, I just turned 73 not long ago. When you reach that age, the body doesn't work as well and the brain doesn't work as well, probably. And that at some point, one of those things is going to fail. And so what I'm trying to do is what I call sprinting to the finish line, which is to say, get as much done before I lose my brain or my body doesn't work. And so I'm not really taking time off. I'm not relaxing that much. And I figure that maybe that'll keep me healthier, but I do fear that something bad could happen. And so I want to keep pushing forward and try to get many things done. And one of the best ways to get things done is to know a lot of people, because you never know who can open a door for you, who can help you in some way. And clearly, if you have a friend and your friend is willing to help you in some ways, that can help you get something done. And so I try to have as many contacts and friends as I can, and ask them to do maybe appropriate things to help me from time to time in the business or philanthropic worlds.
Well, that's great advice, especially great advice for up and coming leaders in our country. Well, as we move toward questions from the audience, this great book, How to Invest, World's Most Successful Investors. This is your fourth book in 4 years. You said that for the first 69 years of your life, you wrote no books. So you are in now catch-up mode. So how do you do it?
Well, look, this book isn't The Origin of Nations or Principia Mathematica or The Wealth of Nations or something like that. And to write those kind of books, Wealth of Nations, or those kind of treatises, that you have to spend the years by yourself doing nothing else and really focusing on it. And I don't have the ability or time to do that. So I have my trick, I guess, if it's a trick, is I do a lot of interviews of people for various things. And I can do the interviews without that much time involved. And then I can edit them down when I'm flying around or looking at things. And I do write a summary of my views, but it's not that complicated to do. And it's a matter of focus and making certain it's a priority. So, for example, in this particular book, it was written mostly, and the interviews were done by Zoom. I think my interview of you, I've done an interview of you on TV, but the interview for this book was done by Zoom because people were willing to do Zoom interviews during the COVID period. So I didn't have to travel as much to put the book together as I normally would. So that's how I did it. It's also something I enjoy. I like writing and I like talking to people, interviewing them. So it wasn't that much difficulty to do it. The more complicated thing is promoting the book. So when you write a book, you want people to read it. So I'm giving all the money away to children's hospitals. So I'm not writing the book to make money, but I would like people to listen to my thoughts or maybe listen to the interviews and people like you, and hopefully they will do that. And the audiobook version of this actually has the actual interview. It's not a professional reader reading the text. It's actually you and me in the interview.
And so you have to be the greatest time manager in the world's history too. You have a very effective, you must, you're so organized. How did you learn how to do that?
Well, I don't know if I'm as organized. I'm not sure my staff would say that, but I have 4 people on my staff that try to keep me organized. And my chief of staff has been with me 32 years, and she's very efficient, and she manages the schedule very well. And I guess also I'm not good at saying no. So if people ask me to do something, I generally do it. And so she just kind of puts it in, but I enjoy it. I'm not doing anything I don't enjoy. I've reached a point in life where I can say no if I don't want to do something, but I generally like the opportunities that come to me, and I enjoy trying to give people my views and enjoy talking to other people and hopefully educating them and then learning myself. So it's it's not a problem at all.
Oh, it's so you say you have a chance now to say no to things you don't want to do and stick with the things you truly enjoy and love. So what's next for you? What's the next chapter for you, David?
Well, I have completed a series for PBS, a 6 or 8-part series, 1 hour each, on American iconic symbols. And it will be aired on PBS in the 2nd and 3rd quarter of next year. And for example, the Statue of Liberty, the Fenway Park, Golden Gate Bridge, Hollywood sign, the American bald eagle, things like that. I've done a history of them and interviewed a lot of people about it. And I spent a year running around the United States doing it. And it took a lot of time. And I went to, far places. I went to, the wilds of Alaska to do the bald eagle part of the story. So I enjoyed that. And that's something I might continue doing as well. And then, I now have 3 children who are all MBAs, all in the investment world, and I'm trying to spend time helping them get their firms further along. And then, my oldest daughter has 2 children who are my grandchildren, so I spend some time and see if I can get them interested in private equity.
That's great.
They're only 2 and 5 at the moment, but they don't really know what private equity is, but I'm working on it.
Oh, well, thank you for this wonderful interview. Again, it's just a privilege to be able to spend this time with you. I truly love the book and reading about the other folks.
Well, John, thank you very much. And thank you for not becoming chairman of the University of Chicago board, which I urge you to do. And I'm happy being the chairman, but anytime you want the job, you can have it. Okay. Right.
Oh, thank you. I think it's time now for questions from the audience.
Okay.
So would you advise someone to get into private equity today? And how has the industry changed since you both started?
Today, the private equity industry is much bigger. When I first started, there were 250 private equity firms in the entire world. Now there are probably 20,000 or so. The industry doesn't use as much leverage as it used to. The industry is not dependent as much on financial engineering. It also is more specialized. People tend to specialize in various areas. They don't just say, I'm so smart, I can do anything. It's also one where it's not today as looked askance by people as it used to be. It used to be thought that private equity people were kind of destroying the economy and hurting people and ruining the environment. I don't think people generally think that today. And the other final change I'd mention is that it's now, while it's called an alternative industry, it's not really so alternative. Anybody that invests today puts some money in some type of quote alternative, which is say buyouts, venture capital, growth capital, and so forth. And I think that's probably therefore clear that private equity buyouts is part of the investment firmament for the foreseeable future. And I think it's a much more significant part of the investment environment than it was when I first started in 1987.
What are your thoughts on using cash value life insurance as a tax sheltered investment vehicle?
I'm sorry, could you speak up? I couldn't hear you.
Yeah, sorry. What are your thoughts on using cash value life insurance as a tax sheltered investment vehicle?
I'm probably not good at answering that because I haven't done that. There are many people that have done that, and I'm told it can work. I just am not that familiar with it. I don't really have it. I don't have life insurance.
For John and David, what would you say is the best investing advice you've ever received?
Well, the most simple one is don't put all your eggs in one basket, and make sure you know what you're doing when you invest. I have said in the book that most people, this book is not designed to make people Warren Buffett or John Rogers. That's not realistic. It's realistic that you can manage your money better than you may be doing now. And if you're picking a way to do it, I've recommended to most people that they invest in some kind of fund. It could be a mutual fund or a private equity fund or some kind of fund. Let a money manager who really does this full-time for a living manage your money. And I've given some standards that I think people should use, which is to say, when you're picking a manager, make sure that you know the track record, make sure the track record is attractive, the people that achieve the track record are still there, the fees are reasonable, the disclosure is good about the performance, the organization is not sued regularly for improprieties, and that the people that who are in the organization are investing their own money alongside you, and also find out who the other investors are. And look at these kind of things and do your own due diligence. People spend a lot of time making money, and then they sometimes don't spend very much time figuring out how to manage it. But they should, get good people to manage their money, use the kind of standards I've outlined in the book and I just described briefly.
And I would add, I guess, one thing that David said earlier, Warren Buffett talks about our economic system is the best system ever invented. And one of the things he often talks about at the annual meeting every year is he reminds us last century, the Dow started at around 66 and ended it after 11,000, ended over 11,000. In that century, that 100 years, we had a pandemic, we had a Great Depression, had several recessions, World War II, war in Vietnam, et cetera. And our system works, things come back. And it's always a reminder that you think long-term is a really important thing and not get swept up in the short-term emotions of the moment and sell out, as David mentioned earlier, at the wrong time when everyone else is panicking. But sticking with it for the long run, I think is kind of the best advice. And then the final thing I would say is invest in your circle of competence. That's another thing that Warren reminds us of. If you're going to pick individual stocks and not go into a fund, invest in individual stocks that you truly understand, where you feel like you have some kind of edge or knack of understanding that industry.
Another point I would add is that I didn't talk about this. That investing is a very important has a very important social purpose. By allocating money the right way, investors do good things for the country. So the people who, for example, allocated money to Moderna, the venture investors that gave Moderna money, really did a good job for our country, because in the end, the Moderna vaccine turned out to be a lifesaver for many people. So people shouldn't look at investors as just greedy people trying to make money for themselves. They're allocating capital to companies that can do good social things and employ people. So I don't like people to say, well, just he or she is just an investor and not doing something useful. They are doing something very useful.
I know you said earlier that you're an avid reader, and that education is very important to both of you. Can you tell us what you're both reading now and any books that you recommend for our audience?
Well, I'll step aside David's book, which of course is the most important book that I've just read. I picked up after that Maggie Haberman's new book on Donald Trump, Confidence Man, and I'm finding that very interesting.
How about you, David?
Yeah, I'm going to be interviewing Bill McRaven and this weekend. Bill McRaven is the person who led the effort to get Osama bin Laden successfully. And his book is, I think, called Sea Stories. It's about his life and that raid. And that's a book that I highly recommend as well.
Great. Do you have another book in the works, David?
I'm working on my next book will be on entrepreneurship. I'm going to try to interview some of the leading entrepreneurs in this country, and then interview people who are the biographers of people who were great entrepreneurs but are no longer with us. So I hope to do that and kind of spell out what I think it makes somebody a successful entrepreneur. John, you're an investor, but you're also an entrepreneur. You started your company with modest amount of money, and you went through a lot of ups and downs, as I did. And I want to kind of talk about the story of great entrepreneurs and why they're useful to our country as well.
That's wonderful. We'll look forward to seeing that one hit the shelves too. And we just want to thank you both. Thank you for your time and for being with us tonight and sharing.
Thank you. Thank you, John. And thank you, Dana. And thank you for giving me this opportunity. And I look forward to seeing you in the bookstore in the summer when I'm out there. Okay.
Yes, we can't wait to see you. And everyone, please, if you haven't already gotten it, How to Invest, the World's Most Successful Investors by David Rubenstein is out now, available for purchase, and signed book plates available while supplies last. Thank you for being with us. Thank you for supporting your local independent bookstores. We will see you all in store and at our next event.
Thank you. Bye.
Take care. Have a great night.
Bye.